Consumers can breathe a sigh of relief as the country's inflation rate has dipped below the 4% mark in September. It now stands at 3.8%, down from 4.4% in August. This decline positions inflation in line with the central bank's 3% to 6% target range. That midpoint, of course, being around that 4.5, making it likely officials in the bank will cut the policy benchmark for the second consecutive time next month. Key factors driving this trend include favorable food harvests and decreasing fuel prices, both of which are expected to support the continued downward trajectory of inflation. Will join us to speak on these latest numbers is Investec's chief economist, Annabel Bishop. Annabel, good morning. Thank you for joining us on this South African morning. What do you make of this substantial easing of inflation?
Yes, hi. That's extremely good news. And of course, the Reserve Bank governor did forewarn us. He said the next three inflation prints, this of course is the first one, is likely to have handles of 3. So obviously that means they'll be below 4%. It's very good news for South Africa, both from an interest rate cut perspective. We think there'll be at least a 25 basis point cut in the November MPC meeting, but also, of course, as well, from an inflation targeting perspective, the Reserve Bank's looking to shift the midpoint of the target range of 4.5%, the target itself, if you will, the target point of 4.5%, down to closer to 3%. And of course, as you know, the inflation target band of 3.6%, has that 4.5% as the midpoint. So, of course, this obviously would be perceived very positively by investors if we did lower our inflation target. It serves to lower inflation itself as well in the longer term, strengthens the rand, and of course adds to a strengthening of South Africa's economic fundamentals and aids in GDP growth.
I was hoping for 50 basis point cut, but you're still maintaining it could be a 25 basis point cut.